Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at SkyWater technology.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
And we really have to start with the third quarter of 2025 because it wasn't just, a good quarter. Some are calling it a complete knockout punch.
It really was. I mean, it completely redefines their trajectory. We saw record quarterly revenue hit $150.7 million.
Okay, that's a big number on its own.
It is, but it's the velocity of the growth that really turned heads. You're talking about a 61% increase year over year, which is great.
61% is solid.
But sequentially, from Q2 to Q3, revenue was up a staggering 155%.
Wait, 155%
Yeah.
sequentially? That just doesn't happen by accident. Something fundamental must have shifted.
Exactly. And it wasn't just one lucky contract. It was the payoff from some major strategic investments.
You mean the Texas Fab 25 facility?
That's the one. They've been integrating it, ramping it up, and in Q3, it contributed a massive $87 million in wafer services revenue, just on its own.
Wow. So that acquisition is really starting to pay off now. What was the other driver? I heard there was more to it.
The other, and you could argue the more exciting driver, was the quantum computing segment. It had its strongest quarter to date.
And that's critical, right? Because that's the high-margin specialized work.
Precisely. Quantum, advanced packaging, superconducting wafers. The momentum in those areas is accelerating faster than I think even they expected.
Which, leads us right to profitability. Because normally when you're ramping up a huge new facility, you expect costs to eat into your margins.
But we saw the opposite here. That's what operational leverage looks like. Gross margin expanded nicely into the 24 to 24.6% range.
Okay, but the earnings beat was the real shocker.
Oh, absolutely. The EPS, earnings per share, came in at a profit of $0.24.
And the street was expecting, what, a loss?
A loss of 17 cents per share. So they didn't just beat estimates, they beat them by 17 cents. It was a monumental swing from a loss to a profit.
So the market just fundamentally misunderstood how the revenue and the margins would flow through.
Completely. And you add in the $25.8 million in adjusted EBITDA for the quarter, it just signals a clear inflection point. That's real operational cash flow, and it proves the model is finally scaling.
Okay, so that dramatic beat forces us to look beyond just one quarter. If the company is creating this much value, how is it protected? What's the moat here that separates them from, the behemoths like TSMC or Global Foundries?
It all comes down to their business model. They call it technology as a service, or TaaS.
Right, so they're not trying to compete on volume.
Not at all. That's a losing game for them. Instead, they position themselves as a secure, specialized partner for design and manufacturing.
So it's less about selling wafers and more about selling expertise and, security.
Exactly. They focus on trusted manufacturing for really mission-critical tech. Think superconducting circuits, advanced packaging for AI, and of course, those next-gen quantum processors.
And the moat there is the intellectual property, the IP.
Absolutely. If you're developing, say, a cutting-edge quantum chip or a military component for the DoD, the process is incredibly unique. This creates astronomical switching costs.
So once a client is in, they're kind of locked in.
Deeply embedded.
Yeah.
Moving that whole process somewhere else would be prohibitively expensive and risky. You become part of their long-term R&D.
And that makes the whole geopolitical situation with all the supply chain tension incredibly relevant. Having secure U.S.-based facilities has to be a massive advantage.
It's the core of their government business. They're deep into DoD-linked programs that require the highest levels of trusted domestic manufacturing. It's a premium service they can charge for.
You can see that in their partnerships, like with Silicon Quantum Computing. They're enabling that next generation of tech to be built right here.
Yeah, and the Fab 25 acquisition literally doubled the scale of that trusted U.S.-based capacity. It just reinforces that whole moat.
Okay, that explains the blowout quarter.
Yeah.
But investors are always looking forward. Let's talk about the future, because the guidance they issued for 2026 is, frankly, audacious.
It really sets a high bar. I mean, Q4 revenue guidance is already strong, looking at $155 to $165 million. Continued growth.
But the 2026 number is the big one.
That's the number everyone is focused on. They're forecasting at least $600 million in revenue and $60 million in adjusted EBITDA for 2026.
$600 million. That suggests this isn't just a temporary spike. They see this as a permanent, large-scale step up in their business.
And to hit that, you need to invest. So that brings up financial health. Are they stable? Are they taking on a ton of debt to do this?
The foundation seems remarkably solid. The debt-to-equity ratio is just 0.17. That's extremely low.
Yeah.
They aren't borrowing heavily to fuel this growth.
And that strong cash flow, that $25.8 million in Q3 EBITDA, it's not getting a dividends yet.
Right, they're reinvesting it.
Pouring it right back into the business. Ramping up facilities, buying specialized tools, especially for the quantum side.
What have we seen from that quantum investment so far?
Well, they've added 4 new quantum customer engagements just since Q2, and they're projecting over 30% quantum revenue growth for 2025. It's a clear signal they think that sector is about to pop.
And there was some speculative buzz you mentioned about M&A, something about hybrid quantum classical stacks. Can you break that down for us?
Sure, so hybrid stack is basically the bridge technology. A quantum processor needs classical electronics to control it, cool it, read the results. The stack is the integrated chip package that manages both parts together.
So it's all about that advanced packaging and integration, which is already one of their big strengths.
Exactly. Their TS model makes them a perfect partner or even a target in that niche. There's some unconfirmed speculation that FAD25 could unlock M&A deals there. Plus, they filed a shelf registration, which hints they're getting funding ready for more aggressive growth.
Let's pivot to the market signals then, because the stock has been on an absolute tear, reflecting all this optimism.
Oh, for sure. The stock delivered, what, a 62.86% return in just 90 days? And over the past year, it's up 92.92%.
There was a recent pullback, though, about 8.5%.
Yeah, small pullback to absorb those gains, but it seems to be forming a nice constructive base. It's holding up well.
So technically, what are the charts telling us? Is this just hype, or is there real institutional accumulation happening here?
The signals are strongly bullish. The 50-day moving average, around $17.26, is way above the 200-day, which is at $13.21.
That's a golden cross formation, isn't it?
Textbook golden cross. It's a classic signal that short-term momentum is confirming the long-term uptrend. It suggests robust buying pressure. It's a strong technical vote of confidence.
And analyst sentiment is still positive, even after that huge run.
Right. They're clearly seeing the value unlocked and are backing that aggressive 2026 guidance. The feeling is that the fundamentals are still catching up to the price.
And there's a near-term catalyst, something happening almost immediately.
Yes. Tomorrow, December 16th, is the 14th annual NYC Summit. SkyWater is participating, so you'll have investor meetings, presentations. These things can definitely create a near-term spark.
Okay, but we have to address the bear case. This kind of high growth always comes with risks. What are the big downsides here?
The primary risk really is all about execution. Can they manage the costs of this rapid expansion, specifically with Fab 25?
So we should maybe expect some margin pressure in Q4.
I think so, yes. We're expecting a slight margin hit, maybe around 200 basis points because of new tool installations and a higher OPEX run rate of around $23 to $24 million. The market needs to be ready for that.
But is the new revenue from the fab outpacing those costs?
The data says yes. While the costs are there, the fab is already generating about $5 million a quarter in gross profit uplift. So it's a transitional risk, not a fundamental flaw.
What about the insider selling? That always makes people nervous.
It's a fair point and something to watch. Insiders have sold a significant number of shares, over 728,000, worth about $11.2 million in the last 90 days. You can't just ignore that.
So why isn't that a huge red flag?
Well, you have to put it in context. The stock nearly doubled in a year. Some profit-taking after a run like that is normal. The key thing is that insiders still own a huge chunk of the company, 37.85%. They are still very much invested.
Okay, so if we pull all these risks together, the margin pressure, the insider selling, they seem more like short-term bumps in the road.
That's the takeaway. The overall trajectory, especially that big 2026 EBITDA target, is de-risking the long-term story. It all comes down to execution now.
So what this means for you, listening, is that the company has really transformed. They're a rapidly scaling specialized manufacturer with a strong moat built on secure domestic work in AI and quantum.
And the decision you have to make is really about your time horizon, isn't it?
Right. Is this a short-term trade into the Q4 earnings in February? Or a multi-year hold betting on the whole quantum revolution?
The technicals and the long-term guidance really seem to support that longer-term thesis. It's a compelling story.
A fascinating look at a company hitting a major inflection point. For everyone listening, definitely keep an eye on this specialized domestic foundry space.
And don't forget to subscribe so you don't miss our next analysis. We'll be back soon.